So today we are going to discuss on advanced financial reporting, and the topic that we will be discussing today is what we call the earnings per share, into bracket what we call in short the EPS, and it is found in the International Accounting Standard 33, International Accounting Standard 33. So when we talk about the EPS, this is the amount of earnings which are attributable to ordinary shares. We normally say it is the amount of earnings attributable to ordinary shares. Amount of earnings attributable to ordinary shares. That is what we call the EPS, or earnings per share. So EPS, basically we have two types of EPS. Basically we have two types of EPS. So when we look at the types of earnings per share, one is what we call the basic EPS, or what we call the simple capital structure EPS. That is what we call the basic EPS. And when we talk about the basic EPS, it is normally computed where for us to get the basic EPS, we will be taking the earnings attributable to ordinary shareholders, then we divide by the weighted average number of ordinary shares, So under the basic EPS, you will be taking the earnings attributable to ordinary shareholders, whereby in this case again, for you to get the earnings attributable to ordinary shareholders, you will be taking the profit after tax, then you raise the preference dividend. You raise the preference dividend for you to get the earnings attributable to ordinary shareholders. Then the other one, you are going to weight the shares. You weight the shares by looking at the weighting factor. Remember, you are going to weight those shares, the shares which were issued during a given period, and together with the timeline when these shares they were issued up to the end of the financial year. So we have those shares which are weighted, and also we have those shares which are not weighted. So those shares which are weighted are those shares issued at consideration. So number one, we are going to talk about the shares issued at consideration. Shares issued at consideration. So these shares issued at consideration are those shares which are going to give us the additional resources for us to spend in a given company. While number two, we have the shares issued at no consideration. So for these shares which are issued at no consideration, these are those shares which will give us no additional resources. In case we are going to utilize, we are going to utilize the resources that we already have. And for these shares which are issued at no consideration, these shares are not weighted. We are not going to look at the weighting factor, or we will not be much concerned at when were these shares issued. So these shares, examples of these shares issued at no consideration, one of it is the bonus element. We'll talk about the bonus element in the right issue. Number 2, we talk about the bonus shares. Bonus shares, or what we call the bonus shares. Also, number 3, we will talk about the share option, share bonus element in the share option. We talk about the bonus element in the share option, bonus element in the share option. Then also number 4, we can talk about the share split, and also we can talk about the share consolidation, share split and share consolidation, when we talk about the share split, this is whereby, for example, if you have one share, you might decide to split it into 5 shares. So that's what we call the share split. The number of shares that you have are going to increase in case you split the shares. Then we have the share consolidation. This is whereby you are going to bring the shares together. Instead, in case if you had, for example, 5 shares, you consolidate them to 2 shares. That is, you bring them together to 2 shares. That is what we call the share consolidation. So these are some of the shares that will be issued at no consideration. And again, in this case, we are not going to weight these shares. So that's about the basic EPS. When you will be computing the basic EPS, you will start by looking at the profit attributable to ordinary shareholders, where you take the profit after tax, then you subtract the preference dividend. Then from there, you are going to weight the number of shares which were issued and fully paid during that financial period. So in this case, when we will be calculating the weighted shares, we normally have a table for us to come up with the weighted shares. So this is the table. The table is going to have the date. Remember, the date must be in a chronological order. So we are going to have the date. Then from the date, we will have what we call the share transaction. Then from the share transaction, we will have what we call the number of shares. Then once we have the number of shares, we are going to have the weighting factor, and then finally we will have the weighted shares. Weighted shares will be given by where you have the number of shares, then the weighting factor. Since the time you issued up to the end of the financial year, in this case we'll be talking about the months. Remember, financial year has 12 months in this case. So therefore, you are going to wait. For example, let us say that our financial year starts from 1st April, for example, 2024 to 31st March 2025. So this is a 12-month period, what we call the financial year. This is our financial year. So this financial year, for example, if you issued the shares and were fully paid on June, let's assume it was on June 2024. So in this case, our date will indicate here 1st June 2024. That is when you had a share transaction, and this share transaction is, for example, issue of shares at full market price. Issue of shares at full market price, and the shares you issued, let us say it was 1,000. So from June to the end of the year, so you have how many months? So from June to the end of the year, you have 10 months. So you are going to wait for 10 out of the total, which is 12 months. Then from there, you are going to get the weighted shares. That is how you are going to compute the weighted shares, and then you add the total for that financial year. That is what you are going to divide down here. And for the case of the profit attributable to ordinary shareholders, we have already stated we are going to take the profit after tax, then we less the preference dividends. So that's about the basic EPS. So other than the basic EPS, we have another type of EPS. The second type of EPS is what we call the diluted EPS. And when we talk about the diluted EPS, this is whereby we calculate the earnings per share, assuming all the convertible securities were exercised, or all the convertible potential ordinary shares were converted. So therefore, in this case, you are going to assume all the convertible securities have been converted, and then you compute the earnings per share in this case. So what are some of the examples of potential ordinary shares? Potential ordinary shares, we normally say that these are those shares which are, or these are, we normally talk about the instruments. These are financial instruments or contracts which are potential for conversion into ordinary shares in future. So the holders of these securities are going to be converted to ordinary shares in future period. We call them the potential ordinary shares. Some of the examples of potential ordinary shares, number one, we talk about the convertible debentures. Convertible debentures is one of the examples. Then number two, we have convertible loan notes or loan stocks. Then number three, we can talk about what we call the convertible preference shares, and also we can talk about number four is the share options. All of these are potential ordinary shares, meaning in future they are going to be converted to ordinary shares. In future you convert them to ordinary shares. That's what we call the potential ordinary shares. So when we will be calculating the diluted EPS, we assume that all these convertible securities have been converted. So for us to get the diluted EPS. And when we talk about the dilution, this is the reduction in the EPS. It is the reduction in EPS. When we talk about the reduction in EPS, we normally say that there is a dilution. Also, we have another word known as the anti-dilution. When we talk about the anti-dilution, in this case, it is the increase in EPS. So the question that you should ask yourself again is, how are we going to know whether the shares have been diluted or the shares have been anti-diluted? So in this case, we will compute what we call the incremental EPS. And how do we get the incremental EPS? Incremental EPS is always computed whereby we take incremental profit. We'll be taking the incremental profit, then we divide by the incremental shares. Once we take the incremental profit, we divide by the incremental shares. We normally compare it with the basic EPS computed. If we find that our incremental EPS is more than the basic EPS computed, so in this case we say that the shares are anti-diluted. If we find that the basic EPS is more than the incremental EPS, or incremental EPS is less than the basic EPS, we normally say that the shares have been diluted. And when we will be computing for the diluted EPS, we only take the dilutive EPSs. For the anti-dilution are never part of the diluted EPS. So now, how are you going to get the diluted EPS? So the diluted EPS, diluted earnings per share, is computed by, we normally start by having the basic EPS. The basic EPS, we have said, is given by the earnings attributable to ordinary shareholders. Then you divide by the weighted average number of ordinary shares. Then from there, the number 2, we are going to look at those incremental EPSs. Incremental EPS, number 1 will come from, let us say, for example, number 1, it is going to come from, let us talk about convertible preference shares. For the case of the convertible preference shares, our incremental profit will be the preference dividend. So we are going to compute here, we have the preference dividend, then we divide by what? We divide by the convertible preference shares, or convertible preference shares, or we can say shares from conversion, shares from conversion of preference, shares from conversion of preference shares, when we assume that these preference shares have been converted into ordinary shares. Then number 2, we can talk about these two, what we call the convertible debentures or convertible loan stock. So for the case of the convertible debentures or convertible loan stock, our incremental profit will come from the interest. And normally when we talk about the interest, it will be the interest net of tax. Interest net of tax. So you will be taking the interest into bracket 1 minus t. Then from there, down here, there will be the shares from conversion of debt, shares from conversion of debt, whereby we are going to take the debt, then we convert that debt into shares. We assume it has been converted. Then lastly, we will talk about the share option. For the case of the share option, what you need to know is that the uh, profit or incremental profit for the share option in this case is always 0. So anytime you are looking at the share option, what should be in your mind is that the incremental profit in this case is always 0. So it will be 0. Then down here we are going to add the shares from the share option, shares from the share option. So that is how you are going to compute the diluted EPS. The diluted EPS on the numerator side, you are going to take the earnings attributable to ordinary shareholders plus the preference dividend plus the interest into bracket 1 minus t, then you can add 0. The 0, you either show it or not, or also you cannot show it. Then you divide by the weighted average number of ordinary shares, then plus the share option from conversion of preference, plus shares from conversion of debt, and share from the share option. So in this case, when I have come with this formula, I have assumed that the examiner has given you all these potential ordinary shares, whereby the examiner has given you the convertible debentures, the examiner has given you the convertible preference shares, and also the examiner has given you the share option. So in a question, you might find that the examiner can decide to give you the preference dividend, preference share, convertible preference shares, and convertible debt. Or the examiner can decide to give you the convertible debt and also the share option. So in that case, your formula will be slightly different from what we have. Reason being, you are going to omit one of the items which will not be in the question. But for those students who like cramming, this is the formula for you to get the diluted EPS. But never cram. Otherwise, when you are going to cram, it means that sometimes if the examiner can trick you, it is going to be difficult for you to do some questions. So that's how you are going to get the basic EPS and also the diluted EPS. So take some minutes so that we can do an illustration. So the first question that we will be discussing is from December 2022, question number 4. So we will start with December 2022, question number 4. This is the question that we are going to discuss. So let us look at the question, December 2022, question number 4. So under the question number 4, this is what you are asked. Now, question 4a, you are told that in the context of the International Accounting Standard 33, that is the earnings per share, explain the meaning of the following terms. You are supposed to explain the meaning of the following terms. The first term they want us to explain is what we call the contingently issuable ordinary shares. Contingently issuable ordinary shares. So the first word they want us to explain is what we call the contingently issuable ordinary shares. Contingently issuable ordinary shares. That's the word that they want us to explain. And we normally say, when we talk about the contingently issuable ordinary shares, these are ordinary shares which are issued at no consideration, or these are ordinary shares which are issued at retro or no consideration upon the satisfaction of specific conditions. Upon satisfaction of specific conditions. So we have said that contingently issuable ordinary shares are ordinary. They are ordinary shares. They are ordinary shares issuable at retro. Issuable at retro, cash or no consideration upon satisfaction of specific or specified conditions. Upon satisfaction of specified conditions. And these conditions can be what we call the earnings. These conditions can be the earnings or what we call the market price per share. Are specified in what we call the contingent share agreement, as specified under the contingent share agreement. Contingent share agreement. So that is what you are supposed to tell the examiner in this case, that these are ordinary shares issuable at retro or no cash or consideration upon satisfaction of specified conditions. These conditions can be earnings or what we call the market price per share, as specified in what? In the contingent share agreement, as specified in the contingent share agreement. Then number 2, the examiner wanted also us to talk about the potential ordinary shares. Number 2, the examiner wanted us to talk about the potential ordinary shares. The potential ordinary shares. And when we talk about the potential ordinary shares, as we had said earlier, that the potential ordinary shares, these are contracts or financial instrument. We can talk about the contract or financial instrument which will entitle the holders to ordinary shares in the future. So you can say that the potential ordinary shares are financial instruments, or contracts which may entitle holders, which may entitle holders to ordinary, which may entitle holders to ordinary ordinary shares in future date, which may entitle ordinary share, which may entitle the holders to ordinary shares in a future date. So that's what we call the potential ordinary shares. They are financial instruments or contracts which may entitle the holders to ordinary shares in future date. And these potential ordinary shares, we had given some of the examples, like number one, we have talked about the convertible debentures, debentures or what we call debt. Number two, we have the convertible preference shares, and also another example is what we call the share options. So these are some of the examples of potential ordinary shares. So that's what the students of December 2022 question number 4 were supposed to tell the examiner in that question. They were supposed to talk about the contingently issue of ordinary shares and potential ordinary shares. Then number B, this is what you are told. You are told that D Limited's equity balance as at 1st October 2020 comprised the following. You are given the ordinary share capital, then we have shillings 10 per value, then we have 10% irredeemable preference share capital, share premium, revaluation reserve, retained earnings, shareholders funds. Then we have the trading result of the company were as follows. You are given the profit for the year after tax. For year ended 30th September 2022, it was 3612 and shillings are 1,000, and for the year ended 30th September 2021, you are given. Then additional information number one, you are told that on 1st January 2021, the company issued 400,000 ordinary shares at full market value. Number two, on 1st April 2021, the company made one for 5 bonus issue of ordinary shares at the existing to the existing shareholders, utilizing its retained earnings. Then number 3, you are told that on 1st December 2021, D Limited invited its ordinary shareholders for a right issue in the proportion of 1/4 at shillings 12 per share. The shares were quoted immediately before the right issue at shillings 15 per share. All the rights were fully subscribed. Then number 4, the company has had in issue a convertible loan stock of shilling 6 million, which carries an effective interest rate of 8% per annum. Each shillings 1,000 nominal value of the loan stock will be convertible at the holder's option into 600 ordinary shares. On 1st June 2022, holders of shillings 1.5 million loan stock exercised their conversion option. Then number 5, the income tax rate applicable to D Limited is 30%. And number 6, the company declared and paid dividend on both classes of the equity shares. Required the basic earnings per share for the year ended 30th September 2021 and 30th September 2022. Then number 2, diluted earnings per share for the year ended 30th September 2022. So those are the requirements by the examiner. So let us see how we are supposed to adjust this question. Let us see how we are going to adjust this question. It is a very easy question, and we are going to start with the basic EPS. And for the basic EPS, I had told you earlier that we are going to start by computing what we call the weighted shares. And how are we going to compute the weighted shares? We have a table where our table will start with the date. Then from the date we have the share transaction. Then from the share transaction we have the number of shares. Then we have the weighting factor, and we have the weighted shares. So this is the table that you need to have. This is our table. Our table will look like that. Then we start. The dates must be in order from the earliest date to the latest date. So when we go back to the first line, you are told that D Limited equity balance as of 1st October 2020. So the first date we will be talking about is 1st October 2020. The 1st October 2020, the share transaction will be the balance brought down. We are told that the par value is 10 and the share capital is 20,000. So we need the balance brought down. So you are going to take the share capital, then you divide by the par value for you to get the number of shares. So the number of shares will be, in this case, you will say it is 20,000, then you divide by 10 for you to get how many shares? 2,000. And remember, our financial year for 2020-2021 is beginning on 1st October 2020. So therefore, in this case, what it means is that these shares are going to be weighted for the full year. So if you wait for the full year, these you multiply by the weighting factor, you are going to get 2,000. Once you have computed that, now we can go to the first additional information. So additional information number 1, you are told that on 1st January 2021, the company issued 400,000 ordinary shares at full market value. They issued 400,000 ordinary shares at full market value. And remember, our shares are in thousand. Our shares, we have presented them in thousand. So we are talking about 1st January 2021. 1st January 2021, there is issue of shares at what? Full market price. Issue of shares at full market price. And how many shares were issued? In this case, they are talking about 400,000. So it will be, because our shares are in thousand, it will be 400. So we are going to wait it for how long? How long are we going to wait it? So it is from 1st January 2021 to the 31st September to 31st September to 30th September, 2021. So we can count using the fingers. So we have January, February, March, April, May. That is 5. Then we have June, July, August, September. So we are going to wait for 9. 9 over what? 9 over 12. 9 over 12. So it will give us how much? Let us see how much are we going to get in that case. So it will be 400. Then we wait for 9 over 12. 9 over 12. In this case, it is going to give us what? It will give us 300. Then we go to note number 2. Note number 2, we are told that on 1st April 2021, the company made a 1-for-5 bonus issue of ordinary shares to the existing shareholders, utilizing its retained earnings. Anytime we talk about the bonus, either the bonus issue or the bonus element, first you need to get the total before you can continue with the transaction. So the total will be how much? It will be 2,400, and this total will be 2,300. Then from there, now we can talk about 1st April, 1st April 2021. 1st April 2021, we have what we call the bonus issue. Bonus issue. We are talking about the bonus issue. The bonus issue of ordinary shares to the existing shareholders. So as of 1st April 2021, these are the existing shares. These are the existing shares. And you are going to be given one for every 5. So how many shares were they given? So it is 1 for every 5. Then we multiply by 2,400. 2,400. So in that case, they were given how many shares? So it will be 2,400. You multiply by 1 over 5. So we are going to get how many shares in this case? So they were given 480. 480. But remember, these are those shares which are issued at no consideration. So those shares which are issued at no consideration are never weighted. So if these shares are never weighted, it is very simple. How are we going to get the weighted shares here? So what you can say is that if 2,400 will give you 480, what about 2,300? So in that case, it's very simple. You just cross multiply. You cross multiply. And when you cross multiply, how many shares are you going to get? So it will be 480. You multiply by 2,300. Then you divide by what? You divide by 2,400. So you will get 400 and what? This will be 460. So the bonus issue are never weighted. Don't come here and give us the period. That will be a wrong computation. A wrong computation. You just equate. You just equate in that case. Then from there, let us go to note number 3. Note number 3. Note number 3, you are told that on 1st December 2024, D Limited, on 1st December. So remember, our year is ending on 30th September. Our year is ending on 30th September. If our year is ending on 30th September, so therefore we are on 30th September, and what we need is for us to get the total. So let us get the total. This plus this will give us 2,880. 2,880, and these weighted shares will be 2,760. 2,760. So we have our balance carried down. Our balance carried down. This is what we have, and here we have our weighted shares. Weighted shares. Remember, when we go to the next financial year, the exercise begins again. When we go to the next financial year, the exercise will begin again. So we are going to begin the exercise again in this case, whereby we will say now it is on 1st October 2021. 1st October 2021, we have our balance brought down. Our balance brought down will be our balance carried down, which is 2,880. 2,880. And these shares are going to be weighted for the full year. You weight them for the full year, so you get 2,880. Then we continue with the additional information. So the additional information, that is number 3. Number 3, you are told that on 1st December 2021, D Limited invited its ordinary shareholders for a right issue in the proportion of 144 at shillings 12 per share. The shares were quoted immediately before the right issue at shillings 15 per share. All the rights were fully subscribed. All the rights were fully subscribed. That is on 1st December. On 1st December, on 1st December, on 1st December 2021. We have what we call the right issue. Right issue. So when we talk about the right issue, it is categorized into two. The right issue will be categorized into two. So this right issue, we have those shares issued at full market price. Those shares issued at full market price. Remember, you are getting one share for every 4. You are getting one for every 4. And the total number of shares at the beginning of the period were 2,880. Then from there, you paid 12 shillings, while you are supposed to pay 15 shillings. So how many shares were issued at full market price? So let us see the shares which were issued at full market price. It is going to be 1 out of 4. Then you multiply by 2880. It is 1 out of 4. Then you multiply by 2880. Then you multiply by 12 out of 15. So those shares which were issued at full market price were 576. So the shares issued at full market price, they are weighted. Shares issued at full market price, they are weighted. Again, let us calculate the months that we have. So we have December, January, February, March, April, May, June, July, August, September. So we are going to wait for 10 out of 12. So in this case, how much are we going to have? So we are going to have 576, then we multiply by 10 out of 12. So in this case, we will have 480. We will have 480. 480. So that is the first step under the right issue. We have issue at full market price. Issue at full market price. Then once you get the issue at full market price, you get the total. We get the total. Let us sum them up. Let us sum them up. It will be 2880 plus 576, which will give us 3456. Then also we sum up here. It will be 2880, then plus 480. So we will have 3360. 3360. So now we have the bonus element in the right issue. So let us have the bonus element. Bonus element in the right issue. Bonus element in the right issue. Again, it is just the same exercise. It is 1 over 4. Out of, you multiply by 2880. But we paid the full market price at 12. So we had a discount of how many shillings? Out of 15, it will be 3. So it is 3 all over 15. So how much will be that? Let us see how much will be that. So it is 1 out of 4. Then we multiply by 1 out of 4. We multiply by 2880. Then we multiply by 3 out of 15. 3 out of 15. So in this case, we are going to have, in this case, we will have 144. 144. So remember, the bonus element in the right issue is never weighted. Is never weighted. So if you are not going to weight, how are you going to compute in this case? In this case, again, it's very easy. You just say, if this one are giving us this one, what about these? So you cross multiply again. These you multiply by these, how many shares are you going to get? So you will just say that we have 144 multiplied by 33, 60. Then we divide by 34, 56. So we will get 140. So in this case, we are getting 140. Then let us continue. We are done with note number 3. Note number 3. Then we are note number 4. Note number 4, we are told that the company has had in issue a convertible loan stock of shilling 6 million, which carries an effective interest rate of 8% per annum. Each shillings 1,000 nominal value of the loan stock will be convertible at the holder's option into 600 ordinary shares. Then they continue and tell us on 1st June 2022. On 1st June 2022. On 1st June 2022. They are telling us on 1st June 2022. So here we have on 1st June 2022. On 1st June 2022. On 1st June 2022, you are told that holders of shillings 1.5 million loan stock exercise their conversion option. So we have the conversion. Yeah, conversion of loan stock. Conversion of loan stock. Remember, how is the conversion exercise carried out? The conversion exercise is carried out this way. You are told if you have the loan stock, and here you have the ordinary shares. You have the loan stock and ordinary shares. You are told if you have shillings 1,000, you are going to be given 600 ordinary shares. You will be given 600 ordinary shares. What about 1.5? What about shillings 1.5? Remember, our shillings are in 1,000 and also our shares are in 1,000. You are going to be given how many shares? How many shares? So you cross multiply. So it will be 15 times 600. Then you divide by 1,000. So you will get how many shares? In this case, you are going to get 900. You will get 900 shares. 900 shares. So they were given 900 shares. Then the conversion is weighted from June to what? To September. So we have June, July, August, and September. How many months? It is 4 out of 12. So in that case, we will get how much? So it will be 900. Then you multiply by 4 out of 12. So we will get 300. So in this case, we are going to get 300. Then we continue. The next one, this is what we are told, that the income tax rate applicable to D Limited is 30%. And number 6, the company declared and paid dividend on both classes of equity shares. On both classes of equity shares, Jameni. So therefore, let us get the total. Let us get the total shares now. The balance, our balance that we will start in the next financial year, of which we don't have. Let us get our balance. Our balance here, we get our balance carried down here, and here we get our weighted shares. So our balance will be how much? In this case, we will take this. So it is going to be 34.56. Then you add 144, and also you add 900. Then you get the total of 4,500. That is the total. And then let us get our total here. Our total here will be 33. 60, then you add 140, and also you add 300, which will give us the total of 3,800. So that is the first step. Our first step was to compute the weighted shares. And the weighted shares for the year ended that year, September 2021, is this one. And for the year ended that is September 2022, these are the weighted shares. These are the weighted shares. That's the first step. Then the second step is for us now to compute the earnings. We are supposed to compute the earnings attributable to ordinary shareholders. Earnings attributable to ordinary shareholders. Remember, we have 2021 and we have 2022. So how are we going to compute this? It is very easy. We need the profit after tax. The profit after tax for 2021 was how much? Let us go back to our question. You are told that the trading result of the company were as follows. Profit for the year after tax, 2021, you are given 31.46. 2022, you are given 36.12. You are given 36.12. Then we said we were supposed to less what? We less the preference dividend. Let us compute the preference dividend. The preference dividend is always given by, you take the interest rate, then you multiply by the preference share capital. So if we can go to our capital structure, we are told that 10% irredeemable preference shares, and the total amount is how much? 8,000. So take 8,000, multiply by 10%. In this case, you are going to get 800. So here we have 800, and here we have 800. So when you subtract, you are going to get the output. Our output will be the earnings attributable to ordinary shareholders. Earnings attributable to ordinary shareholders of how much? The first case will be that 146, then we minus 800, and we get 23.46. This is 23.46. Then the second one will be 36.12. Then minus 800. This will be 28.12. Here we have 28.12. Once we do that, the final step is for us to compute the basic or base case. Basic what? EPS. Let us compute the basic EPS. The basic EPS, we said, will be given by the earnings attributable to ordinary shareholders. Then we divide by weighted average number of ordinary shares. So we start with the year 2021. The year 2021, it is going to be, you take this amount. It is 23.46. Then you divide by weighted, which is 27.60. So you are going to have how many shillings? How many shillings are you having in this case? It will be 23.46. 23.46. Then we divide by 27.60. So we are having how much? It is shillings 0.85. 0.85 per what? Per share. 0.85 per share. Then we have the year 2022. The year 2022. So for the year 2022, it will be 28.12. Then we divide by what? We divide by 38. 3,800. So again, it is going to give us how much? It is going to give us how much? Let us see. It will be 28.12. Then we divide by 3,800. So in this case, we have 0.74. This is 0.74 per share. 0.74 per share. 0.74 per share. 0.74 per share. So that's how we are supposed to compute the basic EPS. So what we have computed here is what we call the basic EPS. Then Roman 2, they need us to compute the diluted EPS. So take 2 minutes so that we can go to the diluted EPS. So we are done with Roman 1, part B Roman 1, then we are part B Roman 2. Part B Roman 2, and under part B Roman 2 is for us to compute the diluted EPS. And to make the work easier for you, when you are looking at the diluted EPS, the first step is for us to look at the potential ordinary shares. Potential ordinary shares. Remember, we had said earlier that these potential ordinary shares are those financial instruments or contract which will be, or the holders are going to be entitled to become the ordinary shareholders. The holders will be entitled to become the ordinary shareholders in future date. So when we are computing the diluted EPS, in this case, we are going to assume that these holders of the potential ordinary shares, they have already been converted to ordinary shares. So let us look at how many potential ordinary shares we have from this question. How many do we have from this question? So this is what we are told. If we go to note number 4, note number 4, you are told that the company has had in issue convertible loan stock. So the first one that is available is convertible loan stock. Convertible loan stock. That is one of what? Potential ordinary shares. And if you look at the question carefully, we don't have any other convertible, potential ordinary shares. If you can go to our structure, what we are given is redeemable preference shares. Redeemable are not convertible. So unless the examiner has told you about the convertible securities, other securities other than the convertible one, are not available for conversion. You cannot convert them. So in our case, we only had one. And once we have that, the second step is for us to compute what? We compute incremental EPS, incremental earnings per share. How do we compute incremental earnings per share? We say is through incremental profit is through incremental profit. You divide by the incremental shares. Incremental profit, then you divide by incremental shares. So in this case, it is very easy. We are talking about convertible loan note, or about if we talk about the convertible debentures, or any kind of debt. For us to get this profit is just given by the interest. Interest 1 minus t. So let us see how we are going to get that. So it is very easy. We go back to the note. This is what we are told, that the company had in issue a convertible loan stock of shillings 6 million. The company had a convertible loan stock of shillings 6 million, which carries an effective interest rate of 8% per annum. So the available is 6 million. Our shillings are in thousand. 6 million. Then the interest is 8%. Then once we have that, it is 8%, and they were only available for how many months? The full amount of 6 million was available for how many months? Let us look at when we converted some. Note number 4. You are told on 1st June 2022, holders of shillings 1.5 million loan stock exercise their conversion right. So they were available for 8 months. So in this case, you multiply by what? By 8 out of 12. 8 out of 12. Then from there, once you do that, you are going to have 1 minus 0.3. You are told that the tax rate is 30%. So let us see how much are we going to get. So it will be 6 million times 0.8. Then from there, times 8 all over 12. Then from there, the tax, 0.7, net of tax. So it is going to be 0.7. So when you put 0.7 here, in this case, you will get how much? 224. So that is for 8 months. 224. For 8 months, you are going to get an interest net of tax of 224. Now let us compute the remaining for the 4 months. How many were converted? We converted 1,500. The total was 600. So how many are we converted 1,500. The total was 6,000. The remaining is this 6,000 minus 1,500. You will get 4,500. Then again you multiply by 8%. Then now it is for only 4 months over 12. Then 1 minus 0.3. How much are you getting now? How much are you getting in this case? So it will be 45 times 0.08. Then times 0.7. So in this case, you are getting just a minute. It is 4,500 times 8%. Then you multiply by 4 out of 12. So in this case, you are getting 120. So here you are getting 100 and 120. So you are getting 120. So let us again compute the first one. The first one is 6,000. Then you multiply by 8%. Then you multiply by 8 all over 12. So you will get the 20, then you multiply by 0.7. It is 224, that's okay. Then the second one again, 4,500, multiply by 8%. So you will get 360 times 4 all over 12. You will get 120 times 0.7. So it is 84. Sorry for that. This is supposed to be 84. 84. This is 84. 84. So therefore, let us get the total interest. So this is the interest net of tax, or what we call the profit. Let us get the total. So our total will be how much? It will be 224 plus 84. So we are going to get, here we get 308. So we get 308, that is 308. So our interest. Now, once we have that, let us compute what? The next one for us to compute now is incremental shares. Remember what we have computed is incremental profit. So how do we compute incremental shares? So the incremental shares will be given by, we carry out the conversion exercise. So here we are going to have, we are talking about the loan stock. We have the loan stock, and here we are going to have what? Ordinary shares. Ordinary shares. We have the ordinary shares. And remember, we were told that for every shillings 1,000 is going to give us how many shares? 600. So the question you will ask yourself, what about shillings 6 million? Our shillings are 1,000. We are going to be given how many shares here? How many shares are we going to get? It is very easy. You cross multiply. You cross multiply. So when you cross multiply, you will get how many shares? How many shares? It will be 600. 6,000 times 600, it will be 3.6, then you divide by 1,000. So you will get 3,600. So here we are getting 3,600. But they were only potential for how many months? They were potential again for this time period. You prorate this time period. So you multiply by 8 over 12. So you are going to have how many shares? How many shares in that case? So it will be that 600, you multiply by 8 out of 12. So you will have 2,400. So this will be 2,400. Then from there, again, the same exercise will continue. So we converted 1,500. So again, we can start again with 1,000 is 600. What about we converted 1,500? So we remain with shillings 4.5 million. Will be equivalent to how many shares here? So again, you cross multiply. So when you cross multiply is 4,500. We multiply by 600. Then we divide by 1,000. So you will get 2,700. So here we are getting 2,700. Then you prorate for how many? 4 out of 12. This period here, 4 out of 12. So you are going to have how many? So you multiply by 4 out of 12. So you will have 900. So here you are having 900. Then let us get the total. The total shares. The total shares will be this plus this. So it will be 400. Answer plus, you take the answer you add 2400, so you will get 3,300. 3,300, that is what you are getting. Now we can compute what? Incremental EPS. And our incremental EPS will be given by incremental profit. Our incremental profit is here. It is 308. Then we divide by incremental shares. Incremental shares are here, 3,300. So how much are we getting as our EPS? 308 divided by 3,300. So we are going to get 0.09. So we will get how many shillings here? Our shillings will be 0.09 per share. So once you compute that, the next question you should ask yourself, is it dilutive or anti-dilutive? We have said, we normally say it is dilutive when there is reduction in EPS. And it is anti-dilutive when there is increase in EPS. So our EPS, remember we are concerned with the year 2022. Our EPS in the year 2022 is 0. Our basic EPS in the year 2022 is 0.74. And our incremental EPS is 0.09. So what it has told in our case here, it is dilutive. And when we are computing now the diluted EPS, we only consider the dilutives. So it will be given by, in this case, it is the basic EPS or earnings attributable to ordinary shareholders plus what? Interest 1 minus T. Then from there you divide by the weighted average number of ordinary shares outstanding. Then you add what? Loan stock. Share conversion, or we can call it conversion of shares. Conversion of shares from who? From loan stock. That is how we get our diluted EPS in this case. So let us get the diluted earnings per share. It will be given by this one. You copy paste. It is 2812. Then plus interest net of tax. It is here. It is 308. Then we divide by the total here we have 3,800 plus the total here we have 3,300. So our diluted EPS will be given by shillings. How many shillings? Let us see how many shillings we are getting in this case. You will take this. It is 2812. 2812. Then plus 308. Then we divide by 3,800 plus 3,300. So you are going to get, you will get shillings. You will get shillings 0.44 per share. 0.44 per share. That will be our diluted earnings per share. That's how we are supposed to compute both the basic EPS and the diluted EPS. So that's how we compute it. And for more information, for those who want to join us on online classes, you can contact. This is the phone number. The phone number will be +254 70265 9450. So that's the number to reach us if you want the online classes. Also, we have the physical classes. The physical classes are still ongoing. We are located in Kisii, CBD. So you can reach us through this for more information. For more information, contact this number so that you can get more information. So for more information, this is the number to reach us, +254 then 702659450. That is the number to reach us if you need more information. We can assist you to pass in all the units. All the units, we got you covered. All the units, we got you covered, and we make your work easier.